Ever wondered why the U.S. economy still grows despite soaring bond yields and falling inflation? It's a question that's puzzled many, and today we're going to try and pull apart the threads of this economic conundrum. The U.S. economy continues to show resilience, with robust gross domestic product growth, even in the face of contradictory economic indicators. Inflation, which is essentially the rate at which the general level of prices for goods and services is rising, has been on a downward trend, which is typically a cause for concern. Simultaneously, bond yields, the return an investor realizes on a bond, have been climbing. High bond yields usually spell trouble for economic growth. Yet in this seemingly paradoxical situation, the U.S. economy continues to expand, confounding economists and market watchers alike. So what's the secret sauce? To understand this, let's first delve into the basic concepts of GDP growth, inflation, and bond yields. Imagine the economy as a large pizza. The GDP, or gross domestic product, is the size of that pizza. When we talk about GDP growth, we're referring to the increase in the size of our pizza. More slices, more toppings, more deliciousness. Now, let's talk inflation. Inflation is the rate at which the price of our pizza increases over time. If last year your favorite slice cost $2 and this year it costs $2.30, that's inflation. And what about bond yields? Well, think of them as a pizza reward. When you lend your money to the government by buying bonds, they promise to pay you back with interest. That interest is your pizza reward, your bond yield. So GDP, inflation, bond yields, they're all intertwined in the complex recipe of economics. Now, with these concepts at hand, we can start unraveling the mystery of the U.S. economy. The U.S. economy is growing, meaning our pizza is getting bigger. Now, let's dissect this pizza analogy a bit. When we talk about high bond yields, think of it as the big pizza rewards that investors get for lending their money. Despite these high rewards, the price of our pizza, or inflation, is not skyrocketing. It's rising at a slow, manageable pace. Now, what's making our pizza, or the U.S. economy's gross domestic product, grow? It's the consumers. Their spending is the yeast that's making our dough rise. Every time they buy a product or a service, they're contributing to the economy, making the pizza bigger. And this is the beauty of the U.S. economy. Despite the high bond yields, or the big pizza rewards, and low inflation, or the slow pizza price increase, the GDP, the pizza size, keeps growing. So, even with the challenges, the U.S. economy's pizza continues to grow, thanks to the voracious appetite of its consumers.